and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. We have a special guest and interviewer on today's episode because this is the Insellerate Takeover episode featuring John Irvine with Change Mortgage and Josh Friend, CEO of Insellerate. So with that, Josh, I will turn it over to you.
Great. Susan, thank you for having us. And John, thanks for being on. First, just want to kind of give a little introduction. I've known John for 20-some years. I think you have more mortgage experience than I do. Had a lot of success in this industry. So I think it'll be interesting to have this conversation today, not only about what Change Mortgage is doing, but just, what have you seen in the last 20 years, what, successful lenders are doing. So John, thanks for joining us.
Yeah, I'm excited to be here. Feels like we've done this before once or twice. It's always good to see you, and I love talking about the business. You had me at hello.
Awesome. Great. So I think one thing to really to start with is Change Mortgage. You guys are dominating in the non-QM space, is from what I'm understanding. And you guys have some innovative products there, and there's reasons why you have innovative products there. And you also serve the underserved market. I'd love to just hear a little bit about what Change is doing, how much you guys are growing, and kind of what do those products look like?
Yeah, I appreciate that. I'll start by saying that Change is a community development financial institution. The acronym is CDFI, and we are a mission-based company. And as you alluded to, it is our mission as an organization to help close the wealth gap in America. And the primary way that we can do so is by advocating for and enabling home ownership opportunities for everyone, including underserved markets. We as a CDFI are specifically approved for African Americans and Hispanics. And what this has enabled us to do is create a unique set of products, I think, that addresses the needs of those underserved markets, as well as a number of other non-target markets, such as self-employed borrowers. So, when you ask why we're able to enjoy the success that we have and how we're able to grow, I would tell you that, it's by staying focused on our mission and by enabling these unique products to be sort of a jumping point for us to help get people into homes.
Yeah, that's great. I think maybe a little elaborate on the unique products. I think that's something that we've talked back in the past. It's about the people that it's a new economy and people are employed, have multiple jobs, self-employed, and kind of what are you guys doing to, how did you innovate in that space, and what is it that the product allows for?
Yeah, I was just at a big national conference this last weekend, and I had the opportunity to speak as a panelist at that conference. And one of the things that we discussed was how much the economy has changed, really over the last 5 years, 10 years. And I joked with the audience saying that there exists this nomenclature that I was completely unfamiliar with just a few years ago, and that is gig workers. What is a gig worker? A gig worker, simply put, are a lot of the very common services that we've all grown accustomed to, particularly through the pandemic. Uber drivers, DoorDash delivery folks, Instacart delivery folks, seasonal workers. There are more and more industries that are innovating in a way to give people the opportunity to work when they want, how they want, with a lot more autonomy and flexibility to be able to participate in the workforce. The downside to that is that the vast majority of these types of workers are considered independent contractors, which effectively makes them self-employed, which is a much higher concentration nowadays than it was 10, 20, 30 years ago. And unfortunately, a lot of the lending guides that dominate our space are guidelines that were written for those workers from 10, 20, 30 years ago. And so if you get a 1099, if you aren't a standard W-2 borrower, it is very difficult to find loans to qualify to purchase homes, to refinance existing homes that you have, so on and so forth. And so recognizing that a high percentage of these gig workers are in our target market, we worked with our community advisory board to help come up with some solutions for that. The biggest one of which being what we call our community mortgage. The community mortgage is a unique loan in this marketplace that most other companies don't have. You have to be a CDFI in order to have this type of loan, but it doesn't require income documentation traditionally. Instead, we qualify people based on their credit worthiness, reserve, and the appraisal. Very simple. It's literally the simplest loan that you could ever do in the mortgage space. Because what we have been able to determine over the last 4 years of being in this space is that just because somebody's a gig worker doesn't mean that they're a bad credit risk. In fact, our loan performance is proving that these borrowers actually perform better in a lot of instances than standard W-2 borrowers.
That's awesome. I mean, I think that's and it's financial markets are usually very slow to adapt to these changes. So I think it's definitely a good market to serve, and it's underserved. It's kind of a good point. When I've always, said in the mortgage industry, John, you've been in this industry for 20 something years. We're in a cycle right now where people are, downsizing. We have some lenders that are growing, some are, there's all difference in the marketplace, but it wasn't as easy as it was the last 2 years. So it becomes I tell people it's a mental game. You have to stick your head into it and realize that there's a lot of production out there. And I think unique products like this, really, I think if you're a lender, you really have to understand, last year you talked to 100 customers, 70 of them qualified for a conventional loan. They all wanted to say yes to you. Right? The 30 that didn't qualify for a conventional loan, maybe 10 of them qualified for a loan like this, but you didn't know it, didn't want to spend time learning it, you didn't want to sell it, so you just lost that business. You never got that business. Right? So, for me, do you have any tips like that? I'm saying that if you're in the space, you should definitely understand loans and programs like this because you need to capture all your business. What have you seen over the years? What do you think about that?
Yeah, listen, you are spot on, Josh. The reality is that in 2020, post-COVID, once the pandemic started and kind of was 2 months in, up until, really Q1 of this year, we saw a mortgage wave that we haven't seen since the early 2000s. Business was literally just falling out of the sky for most people. Refinances rates were at all-time lows. People were in their home with nothing else to do, and so they figure why not refinance their house and get the 2.5% interest rate that was available to them at that time. Those days are gone. Those days are long gone. We've seen interest rates rise faster than they have in modern history. Credit spreads continue to widen out, and the business has gotten increasingly difficult. So difficult that I've actually heard a lot of people say that they feel like times now are more difficult than they were even back during the 2007-2008 market crash. Because I think that the general consumer hasn't caught up to the fact that the market's moved so quickly, and so there's still an expectation that rates are going to be 3, 4, 5%. When the reality is that Fannie's just hit a 16-year high of I don't remember what it is, 7.5% or something like that. Aside from that, refinance volume is off over 80% in the industry. And so the only loans to be had are purchase loans or genuine need cash out refinances. And that means you were, like I said, you were right on the money when you said you have to go and find the customers. You now have to actually be able to identify need and then service that need. And with rates rising, it's more and more difficult for people to be able to qualify for loans. just from a pure affordability standpoint, or DTI. And so having a broader product suite at your disposal, if you're a loan officer or a broker, gives you a leg up. We call it an unfair advantage internally here. It gives you an unfair advantage by having a broad suite of products, so you can help that customer when you are able to identify their needs. And so, you know, if you are a broker or a loan officer at a company that isn't approved with Change, I would highly recommend that you give us a call or check it out, because you need everything, every arrow in your quiver nowadays in order to be able to survive this market.
Yeah, no, that's absolutely right. And I think that those loan officers, those lenders, you know, I was a loan officer years and years ago. And one thing that made me, you know, I averaged, I'm still pretty proud of this. When I stopped being a loan officer in 2002, I was averaging 44 loans a month that was funded.
Wow.
So I think that's, even today's time, that's a good number. And so I've always been around production. But one of the things was, you know, back then there was tons of programs. 2002, there was, you know, all kinds of stated income, no ratio, reduced stock, 12 MAT. And then you had your FHA, VA, 203, you had all these loans. And I was just a student of the game, and I learned all the guidelines. So when I talked to a customer, I was able to, hey, if you're going to get a loan, if there was a program that could get you into a house, I was going to tell you, and I was going to figure out what that was. So then I opened up the market. Then also, if you're a loan officer, lender out there, if you do that well, you're going to get more purchase business, because those real estate agents are going to want to bring you customers that you can get deals done on that other people aren't. Right? It's a great way for people to, you know, really gain that business and that kind of competitive edge. And then lastly, you know, John, I know that in your career you train, manage loan officers, underwrite processors, run production, and so forth. But one thing that, you know, that I'm trying to talk to you a lot about now is loan officers. You know, any kind of message that you would have for them right now in the marketplace as far as what they should be focusing on. For me, it's, you have to focus in on, still going to be $2 trillion in business this year. It's still going to be $2 trillion in business next year. How do I get my part of that $2 trillion? Any parting thoughts on, you know, any loan officers out there, what they should be thinking about?
Listen, I am going to give you a shameless plug, and it's not just because I like you and we've known each other for a long time. I say it, you know, genuinely, for loan officers and originators out there. The best way that you are going to be able to continue to find success even in challenging marketplace is to engage and stay in front of your customers. And if you're a high producing originator like you were back in the day, Josh, it's literally impossible to stay in front of everybody all the time manually. You've got to have technology support those needs. Thankfully, this industry is starting to embrace technology in a way that it hasn't in previous times when you and I were originating. And that's one of the reasons why we are going full bore with Insellerate, because it's a CRM system that allows us to behaviorally stay in front of our clients at all times with appropriate messaging. We can respond very quickly to their needs. We can set up systems to have things automatically happen for us, so I don't have, my originators don't have to think about it. The system actually thinks for them. And so I think that having a plethora of products, having knowledge, you know, you touched on that. You know, we are financial advisors to the largest single transaction for 99.9% of America in their home. And so having the knowledge to give people the comfort that you are the expert in the space, and then technology to support that, I think the myriad of those three things married together are really what can make someone successful in this market.
No, I appreciate you saying that. Is a good point. It's being success. It's how do you repeatable outcomes? How do you automate as much of that as possible, so it's not relying on a human to do all those tasks? Because as good as, you know, I remember saying I was a loan officer, as good as I was, as diligent I was, I never followed up with everybody. It's just no way. I mean, I still, so it's not possible. Yeah, it just doesn't happen. So having systems to do that's what's going to be, I think, the driver. the differentiator as and in the years to come, right? Staying in front of those customers. So, John, listen, I greatly appreciate you coming on here. For all those out there that are listening, I would greatly encourage you to check out Change Mortgage, see what their products are, because it really, as John says, can give you an unfair competitive advantage, and it really will help you. Not only can you serve and grow your business, but you're able to serve an underserved market in ways you weren't able to in the past. So, Susan, thanks again for having us on here, and everyone have a great day.
Yeah, Josh, Susan, thank you so much. I always love coming on, and I'm a big supporter of the CMBA, and so I'm hoping that we get to do this again sometime soon.
Excellent. Well, thank you so much, John, for being a guest on the podcast. And Josh Friend, CEO of Insellerate, thank you for hosting today, and certainly for Insellerate's sponsorship for the Connect podcast this year. We greatly appreciate your support. Thanks to all of you for joining us today on Connect. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.